Thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we'll do the same without wasting a single second of your time. Bada bing, bada boom, we go into the charts for Bitcoin, and it looks like we got that rejection off that 0.65 level, which we beat our head against for quite some time in the past as well, up here in June and July. Every time we hit that diagonal pitch fan of this pitch fan we've had price in since January, we've kind of seen a sharp rejection of it, at least for the first few times we bang our head against it, and coming to the downside here for that long liquidity. What liquidity, you ask? Well, let's go into High Block Capital to take a look. What is High Block? Well, people lock that liquidity into the charts to get burned to a crisp by the market maker for not using a stop loss, and we get to see where those crispy characters lie in wait. So let's do it now. First, starting with the 1 minute time frame. Shout out to everyone here on the live update here. So we were talking yesterday about these guys possibly these guys over here being possibly the lucky campers of the short, and they did not come back for them, and they came to the downside. We did not flip-flop or say it would go up. We were projecting straight downside, and sure enough, it came back for that 100x pool over here. Let's zoom in to show you in detail. So there's $151 million in short liquidity up at that 36,739 level, and they came back, tapped it, and reversed off that short 100x pool.
Fatality.
And that's what happens when you 100x leverage. And then they started to come down into this, and now they meandered around here and then induced some more to the tune of $350 million pools. They V-shaped on the 100xers, continued lower. So these guys that opened up in that 100x pool down here, they got gobbled up once again.
Fatality.
It's why considering using more margin and less leverage is the play to think about, unless you're opening and closing quickly. But even then you get gobbled up by fees, so less leverage, more margin for the win. And going to this too, they opened up another $306 million pool, and they V-shaped into the 100x and the 50x shorts as they went lower.
Fatality.
And then now here we are. There is some liquidity to retrace back into up here at 36.44 to be exact, and we did come down quite a nice sweep of the longs here. Let's go into our Binance chart to see what levels we hit. So we were talking about this ABC to the downside. They went and recovered this wick in its entirety and then some. They went all the way down to that pocket we were looking at a couple weeks ago. Back here we were talking about that fair value gap down in this region. So they went all the way down to that gap and just said, you know what, let's recover this bad boy. And within this impulse here, so this is kind of an interesting thing. We're going to delete this because they took out that pool. Clean up the charts a little bit here. So we were talking earlier today on Monday, False Move Monday. We talked about coming up to here. We were off by $4 or something. It was like $4.17 and we had $4.21. So we were off by $4, talking about the short setup to come down to here. And we are still possibly slated to go lower, who knows, but it came down to this 35k region. If we look at that and remove this, one thing you can use to do that, to check out projections into the future, is the trend base fib level. It takes 3 clicks. You have a impulse retrace idea, and within that math it'll give you a projection of where it wants to go. Now if we do this for this little bit of happiness over here, we can do an impulse from here and then a retrace up to there, and within that 236 level, which we failed at here, would have slated you some ideas down to this 35,170 region into this pocket. So we may not be done in terms of coming down into this region as well. This was an actual gap that we hunted out, sussed out back in the moment, and we just left it there. So we came down to that gap area pretty cleanly. So now we've created another gap on this side, so retracing back into some of those shorts up in this region would make sense at this point. We reclaimed this, so this is in the past, this is gone, goodbye. And this is your 3 hits to the high idea we were talking about. We had 1, 2, 3. We went over that power of 3's idea in this 786 rejection region and came down to that -27 level. Pretty clean right there. So fresh and so clean. All right, so we'll throw on the momentum in a minute. We're not done going through the timelines. Let's expand our vision to the 7-day and take a look at how that is going. How's everyone doing out there? Longs wrecked multiple times today. They sure were. I didn't take a look at the projections of streamers, but generally they pivot pretty nicely if they're good. So they pivot generally after the fact. They're calling for like 40K as we're setting up the short, and then as the short plays out, they pivot. But yeah, so the 7-day time frame, we have a little bit more liquidity starting to percolate. We talked about the percolation and the ability to make these threadbare zones leading to 40K. They need to retrace down to kind of fill the gaps of liquidity on the way down, and then they could surge it up into that liquidity. They got to let the liquidity snowball, you see, and they have been pounding the shorts for so long. They have to give them a little bit of hope. And yeah, that's what they're doing, retracing on the longs that have not yet to pay themselves. Okay, so 7-day time frame, pretty threadbare on both sides in the immediate region, looking like there is more up in the 38K, but as they pivot, that will be the case. Looking at the monthly has the draw to the downside. We were talking about this sweep to the 34K region for some time now, talking about it would be an abrupt sweep coming down to it. Looking at the 3-month, there is also that draw to the downside. If it goes even further, we could be looking at topping out criteria for going into the halving and the new year. A lot of big traders like to take holiday time off, so this could be the case too. We did have a fake out Santa rally last year, but it eventually just led to a drop afterwards. So if we go to the 6-month, 6-month also has some pools down below here. Wait, I gotta change this to max liquidity. I don't even know why it switches when I didn't change it. They're obsessed with changing it back to that. So there's $32 billion down at 33.6 and 26 billion at 33.3 and double digits at 34.2 on the 6-month as a draw to the downside. So this retrace could eventually lead to continuation ideas to the downside if we're so inclined, because we talked about in this 2-year projection that there is nothing really up leading to that 40K range. So there is this 50 billion and 63 billion at 41.2, but they literally swept everything off the table for the shorts leading up to 40K. So they have to kind of build it up, and the snowball is to the downside. We have 261 billion down at 23.6, 195 billion at 24 even, and a whole slew of 100 billion digits down below. So this could be a slow bleed process on the way back down to sweep the lows going into the halving. Who knows? The future is not set nor determined. So if we go into the monthly draw to this zone here at 34K, we do have a wick that needs recovering. Nothing V-shapes into eternity. It double bottoms at least first. So we're going to take a look at the momentum and where that could be now. Okay, time to turn on the momentum and see what's up. Put on our heads up display. Link is in the description for more. MomentumMaster.info. We will have a deal on the Black Friday, just to let you know off the bat. There will be a Black Friday sale going We'll let you know when that comes. We'll have the things going for it. Anyway, this is the schematic at the 15K. Before we knew it was 15K, you can read about all the little components like trend cloud, baseline, stochastic array for those setups. We had that stochastic array for you down at October 13th down here. We had that rocket ship setup, which looked very similar, and we were comparing it to our schematic because this schematic will appear at these bottom areas. It will always look the same. It's a fractal. So anyway, I bet you if I flip this around, it's very similar. So anyway, going into the timelines, let's take a look. All right, so we broke beneath the 4-hour cloud. We bearishly retest and broke the super trend. So the super trend on the 4-hour and the shift of the cloud and the closing candles beneath the cloud would have been your insinuation of weakness. Cross down of the baselines had been holding strong. You have this baseline here crossing down, and just like water trickling down a waterfall, the candles could not close above the baselines, and sure enough it became that downward suppressive effect on the 4-hour time frame. But let's go through the daily and take a look at the 3-day. We were talking about the 3-day just barcoded through the adaptive. We were talking about butting our head against the adaptive. It had been some time since we've been there, since the March zone of last year. So coming up to this adaptive, we closed the candle above it, but now we just closed the candle immediately beneath it. So getting that rejection we were talking about needs to close above 36,337 if it wants to remain up in these regions. But an overall retrace is healthier for continuation, so it makes more sense to me. And this could be the slow path of we said about, I think it was 9 to 12 days of candle closes before these baselines start to give the insinuation of a cross down event. Now the last time we had that cross down event on the 3-day, it was July 27th, and then it started to make its descent on the 3-day time frame, made that cross up and made its ascent. So these things take slow time to play out, but you'll have the signal here first because Momentum Master is leading. All the moving averages are leading in nature. They are not laggard. They lead you to the promised land. It's your first sign of reversal. Baselines are one of the few leading moving averages formulas you will find on the market. So everything, even the MACD here, is leading. So looking at the 3-day, do we have the MACD on the charts? No, it doesn't save that. Wait, it should be showing. What? It's not. Strange. Anyway, so the 3-day is overbought. Money flow and RSI together at an overbought status. Money flow started to come down. Stochastic coming down. Williams average starting to come up to that alarm crossing region. It'll be about, once again, 6 more days or so before this gets to a level where it could cross the threshold of suppression. If we go to the daily time frame resetting here off of some bearish divergence on the money flow and the RSI. We talked about the money flow beneath the RSI here, and there are rare occasions where the RSI comes down to meet the money flow, and in this case it did that. Starting to get that Williams cross down event on the daily as well. The cloud and super trend starting to taper here to that 3 o'clock region and starting to give you this curving idea of kind of this effect of slowing down, or at least abating for the interim on the daily time frame. So you could be coming down lower and sweeping these levels at 34 and 30 sub 34K on the daily time frame. Got that baseline suppression as well in your favor for a continued downside effect. The cross down events on the 22 also had you at hello. You had this cross down and just steady suppression. We're now eating through the cloud on the 22. We tapped into the super trend and we're starting to go possibly lower through that cloud as we melt through it like butter. And going to the 22, or sorry, the 12-hour cloud was where the candle closed. It's attempting to try to cloud kiss this for support. We also went, the interesting thing is this region we went to is also the super trend on the 12 hours, so this kind of reclamation of that fair value gap happens to coincide with these super trend levels. So even if you don't know anything about fair value gaps, you don't know anything about smart money concepts, that's okay. The Momentum Master has all these key levels with average true range in mind that automatically calculate that stuff for you. The 12-hour time frame is starting to suppress itself here. You're getting this possible suppressive idea of the Williams. A lot of times you'll see the stochastic RSI meander around here, and if you're a stochastic trader, you'd be like, why is this not taking off? And a lot of times that's because a lot of traders don't look at the Williams, and the Williams will be coming down to suppress that price. So this is what I mean by suppression. When you get this alarm crossing threshold, a lot of times the Williams dumps hard on that probability of the stochastic RSI. That's why you can't use just one probability indicator. You use them in tandem, and that's what the color weighted backgrounds give you the clue of. Getting blue when you're overbought on all these probabilities, and you start to top out. Conversely, with the dump, it may not be done because the Williams could be that suppressive force on the 12-hour. Looking at the cloud angle, also what we were just talking about on the daily with this curvature starting to show that sign of tapering, at least for the interim, and the thinning out. It's not as thick as it was back here, like trying to short into that, a little bit more risky than shorting as it thins. So the cloud thinning and breaking down at it is generally what is thought to be safer or higher probability trade. It's all a risk, and you're welcome to be wrong at any time. So you got to prepare for both sides being wrong. Breaking the 6-hour super trend, which has been holding since back in October 16th. So we've had this long run on the bullish super trend, which is now officially broken on the 6-hour. And we came down to this region. So I wanted to be able to do a proper analysis. So I dropped my son off at school first, so I'm not pressured to cut it short. I knew this would be a nice time to go refresh the updates here. So we broke the 4-hour super trend. We talked about the bearish retest of breaking this cloud that was pointing to 2 o'clock and breaking down at it. When you break through the clouds, this is the same thing on other things where you reclaim the cloud and you come up above it, and then you kiss it and you continue, and then that continuation idea at the cloud is your most probable high probability setup, and most times it coincides with a SR flip region. They call them breaker blocks, whatever you want to call it. It's been around since trading in the 90s, so it's not anything new. Nobody coined it, they just rebranded it. So if we go back to this, we go to this idea here. Are we coming back into this gap and taking a look at the liquidity? It could be the case that we come up into these gaps here and try to take some of this 50x and 100x liquidity of shorts off the table. So coming back into here, providing a false hope for the longs, and then also stopping out the shorts up at 35,976-ish, maybe coming to the 3644K region. So let's go ahead and move this over there, and 3644 would be around here. So there is some pools up in here that they could come back into if we go ahead and go lower in the time frame. If you're unaware of how to do fair value gaps, so I can show you, I'll do one just to show you I don't need it, but basically you'd have a fair value gap here between this candle and this candle here. Here's a gap, and yeah, if I turn on the fair value gap indicator, it should fill in that. See, it has the gap there and the gap there. I guess there is a wick there, so they're trying to make it, okay, they're including that wick. I didn't see that wick. So there's a gap up here, there's a higher probability red one here, and this is for newer people that don't know about fair value gaps, this is fractal break imbalance, fair value gap liquidity void. It's a free one. You can check it out if you're still trying to understand where the gaps are. And what that will do is basically show you who's in profit up in here. So there's a bunch of 100x shorters up in that region, which we can literally see their positions on. But those people didn't experience any drawdown, so they come back to stop them out or scare them out of their position at break even or negative, so they don't have to pay them. So possibly coming up to that region and fatiguing and possibly continuing lower is what we would be thinking about as you come above and start to make your way through the weak super trends of the 5-minute and the cloud starting to taper here on the 5-minute as well. It's a risky play. I wouldn't be the one to long this region just yet. It's kind of a market reversal perhaps as sectors begin to shift and people take profit and possibly invest into new ventures. I was looking at the USD DXY or the USD, the JPY USD from one of the Momentum Master members who put it out the other day when we had that rocket ship. And sure enough, the rockets played out. That was pretty massive. So let's go ahead and remove this really quick. We're looking at that play, and sure enough, the sector is switching. The yen is getting a little bit of love. Shout out to Dingo out there. Dingo definitely playing this rocket, I'm positive on, and getting that kind of triple bottom bounce. Rockets closed on the hourly time frame as well. And these will become dynamic alerts to your phone. So you don't need me, you don't need anyone. You just need to set that alert using Momentum Master, and it will let you know when the setup is coming to you, as a good trader should. So you got this cross up of the baselines, the dollar probably going down and shifting to the yen now. So we're breaking down at that 236 level. The bullish narrative is over as the yen gets the love back after being suppressed for so long by the dollar. So this broke down at the 236. The 236 is your last vestige of hope for any upside momentum, but who cares about the dollar going up necessarily? And it gave it to the yen. Shout out to Dingo for that pointing out of that. Nasdaq also had hit some regions of some range high zone after eating through the fair value gaps as if they weren't there with that CPI data. Coming back to total 3, the alts kind of holding strong, I would say. They could have dumped a lot harder. It's a lot more channel based momentum here as it goes within the channel here, and you are kind of just breaking the 4-hour cloud here. You're holding the super trend on the 4-hour here. If we go to crypto bubbles, we can see that there's some still receiving some upwards momentum buyback as people still reposition into their alts. So there's still some green to people repositioning as they take profits and re-enter and take profits and re-enter. If we look at the 6-hour time frame, we are holding, that's a big buyback wick on the 6-hour just above the cloud. So the alts could still see some rallying as Bitcoin does its retrace. If Bitcoin retraces in a healthy manner, it gives the alts a chance to rally behind its back. So if we look at the Bitcoin dominance, the dominance also dropping into these pocket regions. So the dominance giving it up to the alts. We are getting the USDT dominance push we were talking about, coming up the baselines here on the 6-hour, also holding the baseline cross up event. Got a rejection off the adaptive and starting to climb our way back out of this bearish projection here. I'm going to delete the projection because I think it's pretty much starting its new path now. So the USDT dominance coming up as people get kicked into USDT from their trades. on those drops there. It could have been a lot worse. It was just a small little dip. A lot of people were going to from buying different things. I think somebody was looking at ETH BTC. Shout out to CNC for that. We were talking about it possibly coming back to this, but it held the range, it held the adaptive. So CNC was on point with his analysis. This one was an equilibrium. No, it was a shallow bounce. So we go to the shallow zone. It was coming just below that 382 and holding strong. ETH BTC. Cloud also holding on that level. All right, we're going to go to look at Litecoin for my man there. Let's go see what Litecoin's up to. So we were talking about Litecoin possibly continuing lower. We're seeing this curvature on the 4-hour cloud, which is continuing in that manner of a bearish tone here as we rejected off of that 786 region. So the 786, when I use these fib projection tools, like generally I use them as moving my stop loss into profit to reassess. If it's going to tap up into these regions of 11382, then it will do that. And then if it comes and breaks down at the 786, it'll knock me out at the 706 if I was in a long, for example. So I don't experience this whole candle here. I would be out of the trade reassessing. So I use these as take profit levels and or stop loss into profit levels for trend-based fib levels. And so then you could even limit order a long back in at the 236 and you would be back up in a massive profit actually. So it's coming back to the 236/786 of this impulse here, although a lot of messiness here. So we're gonna kind of draw this here and go to the equilibrium. We already hit the equilibrium on that. We're gonna go to the pocket bounce, happens to be this. All right, so this, we already tapped the 786 twice. I'm gonna delete this really quick. Actually, we don't need to delete it just yet. So if you come up to a region, let's go ahead and put Litecoin on the liquidity here, LTC. Let's see where the liquidity lies for Litecoin. Litecoin. In a live Bitcoin live chat, people were getting wrecked left and right. Can you give thoughts on Litecoin and Dow Jones? If the Dow Jones keeps trending upward, does that help crypto any? I've been noticing inverse relationships. So if you notice this, watch. Bitcoin goes down, what does NASDAQ do? Go up. I've been noticing that the NASDAQ and Bitcoin kind of get inverse rallies. Now this rally up, Bitcoin was also rallying too, but when Bitcoin was rallying on the 13th, the NASDAQ was going down. And then when Bitcoin went sideways and people were taking profits on Bitcoin, that's when NASDAQ rose. So when we were going sideways, NASDAQ went up. And then now as Bitcoin drops, NASDAQ continues up. So it's kind of like people taking profits on Bitcoin, the store of value assets, gold, and so on and so forth. It's like a sector. So the store of value is one, the indices are another, and then the DXY and currencies is another. So they have these flip of the sectors. So it looks like they take the profits from one sector and inject it into another. So it's possible they take the gold still seeing a rise. I think you'll see a steady rise of that as uncertainty arises in the world, and you're seeing this kind of surge up on gold. But the Dow Jones, wait a minute, why is this having the gap? Okay, I don't have the, here it is. Dow Jones is the YM. I like the one with the electronic data inbound. So you had the rocket ship similar to NASDAQ, and then it took off. And yeah, at some point you'll reach the range high for the Dow. But yeah, I don't follow the Dow Jones as much as I should, but same kind of rally that the NASDAQ had. So I would assume it's the same inverse relationship as the sectors switch. So as Bitcoin kind of retraces down, people will have set up their shorts or whatever here, but then they're injecting their profits into other sectors to rise up. So yeah, that hopefully answers your question. Or does that entice people to take money from crypto and putting stops in your opinion? Yeah, that's exactly it. Exactly. Yeah. And there's like, you know, people entities that hedge funds, BlackRock, things like that have an interest in both. So they're playing both sides of the coin, pardon the pun. So if we go to the, where were we? We were looking at total, that's right, in the Bitcoin dominance and the USDT dominance. So the USDT dominance, if it looks to continue higher, which it does, could possibly be knocking people back into USDT. So watch out if you're in the longs. This is a pretty strong move. It's coming back to the Keltner channel to possibly get some recharge on the outskirts of this and continue higher. Ultimately, I'd like to see more of a dump continue, but just looking at the fair value gap and the 50x liquidity that exists. Oh yeah, we were looking at Litecoin's liquidity. Here we go. Speaking of liquidity, so we were talking about this, and this is having a V-shaped right now on Litecoin into those shorts that opened late. So they came back into some of these shorts that opened into the breakdown, the breakout traders, and then they're eating them up as V-shaped recovery liquidity. And then there's some longs that are still opening, riding that up into the resistance. It could continue a little bit higher into some more shorts, but there's also some longs starting to open up at 75x. And overall, though, your cumulative delta is to the short liquidity to the tune of 110 million. So at some point, retracing back into these shorts, there's a heavy short open up here. Basically, the only one left is the 25x pool. All the 50, 100xers got V-shaped on. So there is a huge amount of liquidity still above on the 25x side of things, but they're pretty good about taking all the 50 and 25xers out, it looks like. So every move is very volatile and takes out all of the 50x and 25x people first for Litecoin. So let's go back to Litecoin really quick. We didn't do it its justice, so let's do due diligence here. So coming down and then coming back up. Okay, so if we go to 12-hour here, we are breaking down on the 12-hour cloud. We've already tapped this multiple times. This is why I want to delete it, because I don't want to think that it'll bounce there again. It's pretty much taken it out twice on the 786. So I'm thinking that it could go a little bit lower here if it fails this cloud. It's the same idea we were talking about for Bitcoin, where if you fail and close candles beneath these clouds, then this is where you could possibly fade. Now, does the liquidity line up with that? So this is where we line up the liquidity. 71.88, there's 2 million short up there. Coming up to the thick bands of shorts, you have some at 72.916, 72.916, not that far away, so you could come up to that 70 gap here. What is BPR? It is balanced price range. It's when you have a gap with a green and a red immediately after with some force behind it. This is a gap that it could come back to and fade off of, perhaps. So in terms of continuing lower, this would be a possibility if it fails to short that. I'm going to remove this zone. Let's go see what this is. I gotta make sure this is accurate here. And this is just above the equilibrium, so the pocket level is there. Got too many lines, so I'm going to consolidate here. The bullish projection is basically did its thing for the most part, so we'll come back to this later. I think it served its purpose for now. We'll come back to this. We'll reassess it at that time. Okay, keeping it simple. All right, so you got this cloud on the 4 hour that's flipping bearish, and that is possible kiss, bearish retest, kiss inbound on the Litecoin to these levels in this golden pocket region, and then possibly continuing lower at that time. So you could be coming up to go down. You'd be looking for some sort of fatigue confirmation on some cloud ideas. If you look at the 6 hour cloud also flipping, we previously had some support ripped down beneath it, so looking for a kind of bearish retest of that idea on the 6 hour. The 12 hour is also something we're breaking down at. We could find some weak support, rally but rejection, sell-off wick into this cloud, starting to get thin on the 12 hour as well. Curvature also curving in a manner here, could be doing something like this. And if we go to the daily, the daily is oversold, so getting a daily push, we got a kiss to the cloud on the daily, which was nice. So getting that daily fresh kiss to the cloud here. If we go to this and look at the equilibrium, we came to that equilibrium zone of the daily time frame impulse and bounced off of it. So we are in a premium level here. You'd be looking for ideally shorts at a premium, coming back into a discount range down here. So looking for this kind of pivot possibly to occur as the weekly time frame is overbought. If we go to the weekly time frame for one last thing here, you are coming back into some ranges here over in this region. From this level we came back, hit it twice on the weekly, so we kind of banged our head up against this previous support, turning to resistance idea, and possibly coming for a double bottom on the weekly. So the weekly time frame once again is overbought. Starting to get this like over this rising sun event on our oscillator though. So at some point getting this surge, this market reversal of Litecoin would be something to think about. Also the weekly time frame baseline cross up event here is also crossed, and we have 1, 2, 3 weeks up. So as long as we close above this baseline level, which happens to coincide with that negative 27, 65, 76 region, you could be having a shallow double bottom continuation idea. The cloud is ever so slightly starting to turn here, and never really analyzed Litecoin on the weekly before, so it's a new experience. Every experience of volume in each cloud is different, but as we come above on the daily, starting to get this insinuation of starting to want to come back up here to this region and watching for a reaction off of that. All right, so let's go ahead and take a look. I think it's on your keep glitching in and out. You said that BlackRock said USDT and Tether are a threat to Bitcoin. Yeah, they did that whole Luna liquidation event with Gemini. There was like some sort of Gemini Vanguard attack to Luna to depeg it, and it did it. So they also invested a lot in FTX and all this other stuff. So who knows how deep the shady rabbit hole goes. I'm not a conspiracy theorist. I used to be when I was younger, but you know, I don't believe that many entities have that much control. It's all chaos. But they do have attempts to get control, which are real, I think. And yeah, so coming up into these fair value gap region on Litecoin, the hourly baseline is crossed up. Just looking at what I see here, it's just looking like it continue. Hourly is overbought. Stochastic, the RSI is still healthy to keep going. 4 hour also looks like it could cascade here to the upside. The 4 hour looking to kind of come up into those short liquidity that we just talked about up in here. So there's more liquidity of shorts, once again, to the tune of 110 million for Litecoin. All right, if you guys had anything you want me to look at, that's about all my time that I can give right now. I have some things to attend to. So if you have anything you'd like me to take a look at, now is the time. Bitcoin also looking to come back into some of these short liquidity. The cloud is mighty thick on the 15. So you could get this pierce rejection, continue to double bottom recovery of the wick down here as you come up to that pool potential up in here. And yeah, that's my story, and I'm sticking to it. Any questions? We're starting to see this hourly flash of a possible cross up of the baseline here too. So let's go see what's up. Aave, all right, boom, Aave. Let's zoom out first and foremost, daily time frame. So it looks very similar in a sense to Litecoin. You're digging yourself out of a trench here, starting to get back into some ranges, basically coming back to this point here, it looks like. So they came back to this range high, didn't break above it, and they still have some other work to do to break out. There's some other resistance levels over here they're working out. Overall, coming to this, draw the impulse, coming to a pocket here. If we're getting a little bit of a retracement on the alts and Bitcoin, a healthy zone to do that would be down in this region. If there is some sort of retracement in mind, there are some levels down below here. Once again, the equilibrium, we'll just keep it at a standard premium and discount region. This is all premium, this is expensive, so people looking to short. This is all discount, everyone looking to long. So looking beneath this level for a long is the healthier mindset to have at this time. And if you look at the 12-hour time frame, everything suppressed and oversold. Williams coming down in a manner that could suppress that, similar to Bitcoin. If you go to the 6 hour coming down, starting to bottom out and oversold on the Williams as well. Starting to think about that super trend level. Are they starting to fatigue out with the sell-off with to break this super trend on the 6 hour that's held since Friday of October 20th? Coming to the 4 hour cloud, also got that bearish retest kiss idea that Bitcoin had, where it came here, kissed it, sold off, and continued to the downside. The 4 hour getting oversold, but kind of acting choppy around this region for whatever region on this Aave. Looking at the hourly has 6 time frames oversold. You did sweep this, you did not come back to this candle 100%, so there is some liquidity down in this region. I think we can look at Aave on here too, so let's do that. Look at this. Pardon me, just a sec. Aave. All right, so Aave has, it looks like somebody hedged on both sides. They got some pools of shorts and longs opened up here. They went and grabbed the 50x Did they take the shorts first? What did they do up there? They went and they took out that pool, and then that's when they opened the short too. So you have this hedged player playing a 1.5 million on both sides play, more in the long regard. So there's somebody hedging on both sides here. Overall, looks like it's imbalanced to the tune of 11 million. This is much lower liquidity than I'm used to looking at, but it is what it is. So there is some vector down in here that they could come back into if they continue lower. If I go to a lower time frame, most likely this is where a candle is. Let's go ahead and snip at it. Try to find that fair value gap inside the hourly. Is there one down here? There's one right here. Immediately seeing this right here on the 5 minute. If I turn on that thing, it'll show you until you get a keen eye where those fair value gaps are still valid. All of these no longer valid. Took this one out. There's still one down here. It could come back to 2. So there is some gappage to reclaim down here. And you could just put a little marker on that, and then we just turn this off. Okay. And then we go back. So there's some liquidity, some longs to sweep down in that region perhaps, if they build it up and drop it. We are getting the 6 time frames oversold though. The 6 is a very good number for takeoff. If you notice on here, when you put on the stochastic array, the number 6 means the 6 time frames oversold. So when you get those 6 time frames oversold, it generally starts to have that probabilistic play to the upside. And the higher the time frame that locks in on, the more likely that is to play. And we are coming to a region here. Once again, it is above the equilibrium, so coming down into this region would be the patient player zone here. If you're patient and you wait, then perhaps you will get rewarded in turn. So coming to these regions, possibly to that zone. So possibly coming into that pocket for some sort of bounce at some point. We had the rocket ship for you at October 19th, which took off. If you had the indicator, you would be able to see that easily closing. We're currently beneath the 12-hour cloud and we're at a premium level, so I'm not interested in longing this. As I said, coming down into this region would be the healthy thing to think, waiting for that setup to occur. It will present itself in due time. We are now on Wednesday, so Tuesday's move was to the downside. Wednesday generally continues a play on Tuesday's play. So it looks like the whole sector of crypto taking a little bit of a retrace, and that retrace looking to continue. So whatever bounce you may or may not have could be a short-lived bounce, so be aware of that. So any type of bounce could be a liquidity grab to rip it lower into those rocket appearing regions. Looking at this, yeah, there's not that much liquidity to justify it. So that's about it for Aave coming down into this region here. The equilibrium level, sweeping that thing, looking how it reacts off of that will be where we'll keep our eyes on the prize. So let's go ahead and go back to Bitcoin, see if that's going to do some more damage to the downside. We're looking at possibly coming up here in the Asia/London handoff, come up here and then come down, recover the wick, create a double bottom scenario, possibly come to even lower prices, but getting a little bit of a bounce. And the cascade of the hourly candle, you can only take what is given. So it's saying it wants to go up and take some of the short liquidity, starting to flash that hourly cross up event. So this cross up of the baselines telling you we're going up from here for at least a little bit of a push to these short pools up above. Cloud is mighty thick, so even if we get up 2%, Do we get a rejection up in here and come back lower? Previously been seeing rejection, rejection, rejection on the cloud. So does that continue this super trend to the downside? I say it will, and it will go up possibly to this adaptive moving average on the 1 hour time frame, which happens to be that pool at 36.46, and then they could possibly meander their way back down to the wick at 34.8. And that is my story, and I'm sticking to it, folks. All right, guys. So, really appreciate your time. Thanks, man. Yeah, just doing what we do. Just got to do the slow grind, but I'm just happy to help. I always try to serve others as best I can. So, thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we'll do the same, bringing the fire, the accuracy, the precision, all that fun stuff, and we'll catch you on the flip side. Peace.